Further classification is on the basis of the function, a functional classification of a cost. On the basis of functional classification, we can classify the cost which is associated with the manufacturing or production, which is associated with the administration function, which is related to the selling and distribution function, which is related to the research and development, and which is related to the pre-production. These are the different functions. Before starting the production, certain costs are incurred. That will be called as the pre-production cost. When you will start with the production, to complete the production, the cost which will be incurred, that is the manufacturing and production cost. The cost which is incurred in relation to the office and a management level, that is the administration cost. The cost which is incurred for marketing, selling and distribution of your product, that is called as the selling and distribution cost. And the cost which is incurred for the purpose of making a development or a research of a launching or a creativity of a new product, that is called as a research and a development cost. So this classification can be done on the basis of a function. Next one, a relationship with that of the accounting period. In relation to the accounting period, when we are talking about, the cost can be a capital cost and a revenue cost. It means in our financial accounting, as we were calling as a capital expenditure and a revenue expenditure, a same manner over here, on the basis of accounting period, the cost can be classified as a capital cost and a revenue cost. If we will going to purchase the plant and machinery, in that case, for a purchase of plant and machinery, the cost which is incurred, it will be called as a capital cost. It is a long-term basis. The benefit of which will be going to be received in a coming years. Whereas revenue cost, it means the cost which has been incurred in the current period. So day-to-day activity for the production, for your administration, for selling and distribution, the cost which has been incurred is called as the revenue cost. So it is just similar classification that as we are already aware in case of a financial accounting as a capital expenditure and a revenue expenditure. Next, on the basis of the controllability, a controllable cost and a non-controllable cost. A cost which can be controlled, which can be managed properly, are nothing but the controllable cost. There will be certain costs which will be affecting by the external factors. That will be a non-controllable cost. A variable cost which will be there. Suppose my material requirement is of 100 kg, but in the market the prices are goes on changing. In that case, I cannot control that cost because it is a non-controllable cost. Outside forces, because of that, if your cost will going to change, it is a non-controllable cost. Within yourself, on the basis of requirement of yourself, if you will going to able to control the cost, that is called as a controllable cost. The cost for the analytical and decision making purpose. For the purpose of analysis as well as the decision making, the cost can be classified as a opportunity cost, a sunk cost, a differential cost, joint cost, common cost, imputed cost or the notional cost, uniform cost, marginal cost, replacement cost and an out-of-pocket cost. Let us understand what does this different cost means. Opportunity cost. Opportunity cost, it means it is the cost that if you have taken one decision, if you are having a, suppose there are two possibilities. If you have taken a one decision, then if you are losing the another opportunity. To give you the simple example, if I am having a 1 lakh rupees and if I have invested the 1 lakh rupees in a fixed deposit, it means I have lose the opportunity of investing that 1 lakh rupees in a shares or a mutual fund. So what was the revenue that I have lost if I would have invested that money into the shares or a mutual fund as compared to the fixed deposit? That will be considered to be my opportunity cost. The opportunity that I have lost. Sunk cost. So opportunity cost is an important cost whenever you are taking a decision in a selection of a project or a selection of a product line. Sunk cost, that is nothing but the cost which has been already incurred. For the decision making, this cost is not at all important. It is a sunk cost. Sunk, it means it is already incurred, it cannot be changed, it is not important for the decision making. Differential cost. Whenever you are thinking about the different level of activity, from one level of activity to the another level of activity, the cost difference which will be there, that is called as the differential cost. At a 70% level of activity, suppose I am incurring the 70,000 expenses, and at a 80% level of activity, suppose I am incurring, let us consider a 78,000 rupees expenses, then for a 10% level of change of activity, I will have to incur a differential cost of 8,000. Joint cost. Joint cost, it means nothing but from a single raw material, sometimes you are manufacturing the more than one product. So up to the certain level that material will be used, the expenses will be incurred for both the product, and then the product will be splitted. Then product will going to manufacture separately. That will be nothing but called as a, up to that level the joint cost is incurred, and then the two products are separated for the purpose of manufacturing. That is called as a joint cost. The common costs are nothing but the cost which has been incurred commonly for all the product. Till the completion of their production, the cost which has been incurred for all the products are nothing but called as a common cost. Imputed costs are the notional costs. These are not the actually payment of a cost, but these are the costs related to your production or related to your product, and while making a decision you have to consider this particular notional cost. For example, interest on a capital to be given to the proprietor or the partners in a partnership concern. Actually that amount will be reinvested in the business, but expenses which has to be considered, a partner is suppose acting as a finance manager in a business, partner is acting as a sales manager in the business, then suppose you would have appointed some other person in that place, you would have to pay the salary. But since the partner is acting over there, you will not have to pay the salary. So salary to the partner who is acting as a sales manager, or salary to a partner who is acting as a works manager, such type of expenses are considered to be an imputed cost, or it is considered to be a notional cost. Uniform cost. Actually it is not the cost, but uniformity maintained in a calculation of a cost is called as a uniform cost. A marginal cost, that is nothing but basically a variable cost. Whenever you are considering a two level of activity, the differential cost which will going to arise is basically due to the variability. Change in the volume or change in the activity. Because of that, whatever the change in the volume and the change in the activity, the cost which will going to change, that will be called as a marginal cost. Replacement cost, by the name itself it is suggests that if you have decided to abolish one activity and you have want to replace the another activity in place of that, what will be the cost that will be incurred for the purpose of replacing, that is called as a replacement cost. And out of pocket cost, that is nothing but in addition to your normal cost, whatever the additional cost that you have to incur, that will be considered to be a out of pocket cost. All such costs are important from the point of view of decision making and analysis purpose. The other costs which can be said, these are nothing but a combination of the different bases on the basis of which we can see that these costs can be said. A conversion cost. The cost which is incurred for converting a raw material into the finished product from one activity to the another activity is called as a conversion cost. Converting the raw material into the finished product or from one activity to the another activity, that will be called as a conversion cost. A normal cost. The cost which has to be incurred normally for your day-to-day activity, for your production, etc., that is called as a normal cost. Traceable cost already we have seen. Avoidable cost, the cost which can be avoided. Yani unnecessary some cost may be incurred. Even if you will going to avoid the cost, it will not going to affect your day-to-day activity. That is called as the avoidable cost. Unavoidable costs are the cost which has to be incurred. For example, a direct cost is an unavoidable cost. A direct material, direct labor, direct expense, that is an unavoidable cost. Total cost. Total cost is nothing but the combination of the direct and the indirect cost, that is called as a total cost. And value added cost. Whenever from one activity to the another activity you are doing it, up to the one activity you have incurred the 100 rupees cost. For the next activity, up to that you have incurred the total cost has become 150. So value added cost from one activity to the another activity is of 50 rupees. So that is called as a value added cost. So these are nothing but the other costs which can be said. So on the basis of cost, we can make the classification of a cost under the different heads. Let us see the another important terms in our cost accounting. Cost center and cost unit. Many a times these two terms leads to the confusion among the mind of the students. What exactly meaning of a cost center? What exactly meaning of a cost unit? Let us understand. As per the Chartered Institute of Management Accountants of London, cost centers means a production or a service location, function, activity, or an item of equipment whose cost may be attributed to the cost units. So it means it is a location or it is a function or an activity. First of all, the total cost of that will be decided and then it will be attributed, it will be divided to the different product. Such location, function or activity is called as a cost center. It may be a department, it may be a function, it may be an activity, and on the basis of that it will be considered a total cost and then it will be attributable to the different product. For example, the administration. Administration is considered a function, it will be considered to be a cost center. Production department, a production department A, production department B, production department C, these are considered to be a cost center. First of all, find out the cost of a production A, production department B, production department, then it will be attributable to the, on a suitable basis, to the cost units. Cost units, when we are talking about, that time it will be nothing but a one unit of an entire production. So cost center is the smallest organizational subunit for which the separate cost collection is attempted. So as I told you just now, a total cost of the organization may be 1 crore, but it will be having suppose 10 departments. Then in that case, for every department, how much is the cost? So cost center is the smallest organizational subunit for which the separate cost allocation is attempted. Thus, the cost centers refers to the one of the convenient unit into which the whole factory organization has been appropriately divided for a costing purpose. Whenever you are thinking about controlling the entire organization cost, it will be difficult for you. But when you will going to divide that entire organizational cost into the sub-unit of an organization, and for that every sub-unit, if you are calculating or attributing the cost and you are trying to control that, it will be more effectively can be controlled. So therefore, a cost center, it is the smallest organizational subunit. A production, a administration, a selling, a marketing, a distribution, these are nothing but considered to be a different cost center for any organization. So therefore, appropriately you can divide the cost of entire organization for the costing purpose. Cost center may be classified as per their requirement, that is a productive, unproductive, mixed cost center, personal and impersonal cost center, operation and a process cost center. Productive, that is nothing but, as I told you, production department and in relation to the production. Unproductive, it means nothing but the administration, a selling, a marketing, that is a unproductive. A mixed, that will going to involve a production as well as the non-production. A personal and the impersonal. Certain centers will be in relation to the personal. Personal, that will be nothing but the canteen expenses. That will be in relation to the laborers, workers, their personal or staff welfare expenses. Impersonal expenses, that will be nothing but not in relation to the persons. Operation and a process cost center. Operation, it means nothing but, and a process is nothing but the expenses which are incurred for a production, and that production is divided into the different stages. For every stage, how much cost is incurred, that is to be calculated. That is called as the process cost center wise. The cost will be attributed. When we are talking about the cost unit, again, the SEMA London defines a unit of a cost as a unit of a product or a service in relation to which costs are ascertained. So therefore, whenever you are talking about the total cost of a production or total cost of a 1000 units, 1000 units total cost is 10,000. Then how much is the cost of a 1 unit? That will be nothing but called as a cost unit. A cost unit is a device for the purpose of breaking up of a or separating the cost into the smaller subdivisions. The forms of measurement used as a cost units are usually the units of a physical measurements like a number, weight, area, length, value, time, etc. So cost unit will depend upon what type of the activity that you are conducting, what type of a production or a service that you are giving, and in relation to that, how you want to find out the per unit cost. So that can be in terms of a number. For example, in a case of an automobile industry, the car manufacturing which will be done, you will have to find out a one car value, that is a number wise, a per number, that is a one car value you have to find out. A weight. In a steel manufacturing, that is a steel industry, you have to find out a per ton steel cost. Area. In case of a construction industry, you have to find out the area wise cost. A per square meter, a per square feet cost you have to find out for a construction like that. Length. In case of a construction industry, whenever you are constructing the road, how much will be the cost per kilometer, that you have to find out. A value, time, like that. So it means it will depend upon what type of the activity that you are conducting, and in relation to that the per unit will be decided. Some of the examples we will going to see the relation with the activity, how the cost per unit will be decided. See the industry and the product, in relation to that the cost units which will be decided. In case of an automobile industry, as I told you, a number will be a cost unit. A bricks works, a bricks manufacturing, over there normally it will not be considered a per brick, but it will be considered to be a 1000 bricks cost will be calculated. In case of a cement manufacturing industry, a cost will be decided a ton cost. In case of a transport industry, no manufacturing but service is provided. If the service is provided of transportation of goods, then you have to consider the ton kilometer cost. A per ton kilometer, how much is the cost? And if the transport industry is related with that of the transportation of the passengers, then how much you have to charge for the passenger kilometer, one passenger kilometer, for that how much charges you have to, or how much cost you are incurring, that you have to calculate. Next is the chemicals manufacturing industry. Over there a per liter, per gallon, per kg, per ton cost will be calculated. In case of a steel, sugar, it will be a per ton cost is calculated. In case of a textile industry, you have to calculate the cost per meter of a cloth which is manufactured. The selection of a suitable cost centers or suitable cost unit for which the costs are to be ascertained in an undertakings depend upon a number of factors which are listed as follows. To decide that which cost center or a cost unit has to be considered, for that a certain factors, on the basis of that you have to decide that what should be the cost unit or what will be the cost center. Let us refer what are the different factors which will be responsible for selection of a suitable cost center or a suitable cost unit. First one, organization of the factory. How you have organized your factory. It means in a factory how your layout is there. How your factory has been divided into the different departments. On the basis of that, cost centers can be decided. Next, conditions of incidence of cost. When the cost has been incurred, in which condition the cost is incurred. On the basis of that, you will be able to decide the cost center as well as the cost unit. Next, requirement of the costing system, that is suitably for the units of centers for a cost purpose. So requirement of a costing system, which cost system, how the cost system is to be implemented, so that accordingly you can decide the units of a centers for a cost purpose. Availability of information. How you are getting the costing information. If you are getting a costing information in a proper feedback manner, in that case, accordingly you can think about smallest to smallest cost center you can fix it. Management policy regarding the particular choice for several alternatives. How management is taking the or accepting the costing system. How effectively they are ready to accept the decisions of a costing. On the basis of that, you can have a selective different alternative for the purpose of deciding the cost centers as well as the cost unit. Now let us come towards the methods of costing. The methods of analysis and presenting the cost vary from industry to industry. The method which will be adopted in one industry for ascertainment of a cost cannot be utilized in the another industry because their product may be different, their service may be different, and therefore a method will going to differ from industry to industry. The different methods are used because the business enterprise vary in their nature and in the type of the products or services they produce or render. For example, if you are adopted a certain method of ascertainment of a cost in the manufacturing industry, the same method you cannot adopt for the transport industry because transport industry is involved in providing services to the people, whereas a manufacturing industry is involved in the manufacturing of a product. So the method which has been adopted for the ascertainment of a cost in a manufacturing industry cannot be used in a service industry. Even in a manufacturing industry itself, for one manufacturing industry, whatever the method that you are utilizing cannot be utilized for the another one. For example, in case of a cement manufacturing company, the method which will be utilized for ascertainment of a cost cannot be utilized for the toy manufacturing company. For that, you have to utilize the different method. So it means the different methods will be used because the business enterprise vary in their nature and in their type of the product or services that they are produce or render. The different methods of cost are, first of all, it is a job costing, where the one by one job is taken and it will be completed. Over there, a job wise cost will be ascertained. For example, a machine manufacturing or machine construction industry which will be there, a big machineries which are prepared. Normally the order is first of all received for making the machine, and as per the specification of that, a machine is manufactured. In a machine making or machine manufacturing company, every machine is different from the one to the another because it will be as per the requirement of a customer's need. As per the customer specification, the machine is manufactured. And because of that, in such industry, in such organization, the job costing is followed. Contract costing. Contract costing is the method which is followed in a construction work. Construction of a building, construction of a road, where the production will going to take for a completion a longer duration. It cannot be completed in 1 year. It will going to take 3 to 4 years. We can see that construction of a building project will going to continue for 5-6 years. So in such case, how to calculate the cost of that construction? In such case, the contract costing can be used as a method of costing in such industry. A batch costing, where the production is of a smaller units. In that case, instead of calculating the cost of a one unit, it is better that you have to calculate in a batch. A bricks manufacturing or a toy manufacturing, over there the batch costing can be followed. Operation costing, to ascertain the cost of a particular operation. Whenever your activity is divided into the different operation, and for every operation you want to find out the cost, then over there operation costing can be utilized. Process costing, whenever the raw material converted into the finished product, that entire production procedure is divided into the different stages. That time you can utilize the process costing to calculate the cost of every stage of a production. Every stage of a production, over there it is called as a process, and accordingly we can decide the cost. The oil manufacturing industry, a ready-made garment industry, a bakery product industry, or a dairy product manufacturing company, such company utilizes the process costing. Unit or a single output or a single output costing, normally where the assembly is done. With the help of the assembling the different parts, you are making the product, like a bicycle assembly. Over there, a unit or a single or a output or single output costing can be followed. Because over there by assembling, you are making a one unit. There are different parts and that will be assembled, and with the help of that one unit will be made. A bicycle assembly, or in case of a molded furniture, the furniture which will be molded and accordingly it can be stored in a small place. Like that, a product which will be there, over there the unit or a single output or a single output costing can be used. Operating costing. There is a difference in operation costing and operating costing. Operation costing, that is related to the ascertainment of a particular operation, whereas operating costing, that is related to the service industry, railways, road transport, hospitals, hotels. Over there you are providing the services. So in relation to that service, how to calculate the cost? Railway will have to decide that how much should be the ticket fare for the 1 kilometer. If the passenger is traveling by 1 kilometer by ordinary cars by the first class, how much fare that has to be calculated. For that, first of all, they will have to decide how much will be the passenger kilometer cost. So per passenger kilometer cost they will have to ascertain, and then on the basis of that they can decide what will be the fare. So it's where the operating costing is used. Multiple or composite costing. There are certain industries where you cannot utilize only one costing method, but at a different level you have to utilize the different methods of costing, like a motor car or the aeroplanes manufacturing, where the manufacturing is nothing but a longer process. It involves a process. It can be divided into stages. Sometimes it will be also having, as per the customer specification, a car will be manufactured or the aeroplane will be manufactured as per the customer specification. Then you have to adopt the job costing. So it means a more than one costing method whenever it will be utilized. That time there will be a multiple or the composite costing method has to be used. So these are the different methods of costing as per the requirement, as per the specific industry, as per the organization. You have to decide that which method of costing has to be utilized. Let us move on to the techniques of costing. Now, what is the difference in between the methods of costing and the technique of costing? Methods of costing, that is nothing but the ascertainment of a cost of a product or a service. Whereas technique of costing, it means from available information you have to do certain calculation and take the decision on the basis of that calculation. That is called as a technique of costing. So technique of costing, in which basically we are not interested in ascertainment of a cost, or even if we are calculating the cost, that will be calculated for the decision purpose, and that is nothing but called as a technique of costing. First one is historical costing, a calculation of a cost of a past period. That will be a conventional or a historical costing. A standard costing, ascertainment of a cost of a particular level of activity before commencement of that activity is the standard costing. Marginal costing, to make or buy, or whether to accept the order or to reject the order, such type of a decision whenever it is to be taken in the business, a marginal costing will come into the help. Uniform costing. Uniform costing, it is nothing but the technique. It means it will be a uniformity in a method of costing which will be used in an organization or industry. It should be uniform so that comparability between the two period, between the two organization can be possible. Such type of the technique is called as the uniform costing. It means accounting or the ascertainment of a cost is followed uniformly in all the industry, that is in all the organization under one industry, or in all the branches of one organization, so that accordingly the comparability can be possible. A direct costing, the costs which are related directly with that of the product, accordingly you are doing the calculation of costing. That is a direct costing. Absorption costing, the cost is having one tendency to attach with one another. Whenever we are considering the calculation of the total cost by considering the variable and fixed cost all together, that is called as the absorption costing. Activity based costing, in relation to the activity, how the cost is incurred. For every activity, how much is the cost is there. For an activity base, if you are calculating the cost for the purpose of controlling the cost, in that case, this technique is called as the activity based costing. Next, we are moving towards the cost accounting standard. To have a uniformity, to make the cost accounting understandable or comparable for everyone, in every accounting or in respect of every subject, there will be a certain standards are fixed. Similarly, cost accounting standards are also formulated. The cost accounting standard has been issued by the Institute of Cost Accountants of India, and the following are the objective to be achieved through the CAS, that is a cost accounting standard. Why these cost accounting standards are formulated? First, to provide the better guidelines on the standard cost accounting practices. It should not happen that a certain cost is considered as a variable cost by the one organization, same cost is considered as a fixed cost by the other. There should be a standard cost accounting practices. That was the first objective. Secondly, to assist the cost accountant in preparation of a uniform cost statement. With the help of the cost accounting standard, the cost accountant will going to prepare the statement, and since it will be standards has to be followed uniformly, the statement which will be prepared can be a uniform statement in respect of a organization. Third, to provide the guidelines to bring a standard approach towards maintenance of cost accounting records under various statutes. Like in a financial accounting, there are concept, conventions, principles which are followed for a financial accounting. Similarly, in our costing, to provide the guidelines for the purpose of maintenance of cost accounting records, a cost accounting standards was necessary. Next, to assist the management to follow the standard cost accounting practices in the matter of compliance with the statutory obligations. Certain statutory obligations as per the law, certain statements that you have to submit as per the company law, etc. For that purpose, to assist the management to follow a standard format of accounting practices, for that purpose cost accounting standards was necessary. Next, to help the Indian industry and the government towards the better cost management. As we have seen in our so far discussion, cost is considered to be one of the important factors which you cannot just simply ignore by considering only the financial accounting, because cost management is one of the important thing. If you are able to manage your cost in a proper manner, definitely your revenue will going to improve without doing any other thing. So that is why a cost management, how to do the cost management to help the Indian industry as well as government towards the better cost management. By keeping this object in mind, the cost accounting standards have been formulated. The Institute of Cost Accountants of India, recognizing the need for a structured approach to the measurement of a cost in a manufacture or a service sector. So Institute of Cost Accountants of India has recognized that there is a need of a structured approach for the measurement of a cost, whether it will be a manufacturing industry or whether it will be a service sector. And therefore it is necessary to give the guidance to the users of such organization. Hence it has constituted a cost accounting standard board. So Institute of Cost Accountants of India has constituted, or they have formulated, a cost accounting standard board with the objective of formulating a cost accounting standards. The board has given a 15 cost accounting standard and the documents on a generally accepted cost accounting principle, that is of GAAP. The different cost accounting 15 standards which are there, that we will going to see one by one. Basically, the objective is nothing but to formulate the system, to record or calculate the cost in a proper manner, and uniformity to be maintained with a reasonable calculation of a cost accurately. The cost accounting standard 1 is in relation to the classification of cost. The objective is for the preparation of the cost statement. While preparing the cost statement, how the cost is to be classified, on what basis is to be classified for the different industries, for the different organization, that has been given in a cost accounting standard 1. Cost accounting standard 2, that is a capacity determination. This was revised in 2012. Earlier, their objective only for the determination of the capacity. But whenever it has been revised in the 2012, the objective is to bring the uniformity and consistency in the principles and methods of determination of the capacity with a reasonable accuracy. So capacity only determination will not be there, but there should be uniformity and a consistency, and accuracy should be maintained. That is what it has been highlighted as an objective in a revised cost accounting standard 2. Cost accounting standard 3 is in relation to the overheads, which has been revised in the year 2011. Earlier, it was having an objective only for the collection, allocation, apportionment, and absorption of the overheads. Whatever the other expenses that are incurred, which is normally called as the overheads, how it has to be ascertained, how it is to be allocated, how it is to be apportioned to the different product, how it is absorbed. In relation to that, earlier it was the objective. But again, in the year 2011, the objective has been widened and bring the uniformity. There should be a uniformity in a absorption, allocation, as well as the apportionment of overheads, and consistency in the principles and the methods which have been followed for determining the overhead with a reasonable accuracy. Cost accounting standard 4 is in respect of the cost of a production for captive consumption. This cost accounting standard is basically framed for the purpose of central excise. In a central excise, the goods which have been manufactured in India and accessible goods on which the excise duty has to be paid by the organization. But if the organization is manufacturing the goods and it has been utilizing for their own consumption in a further production, in that case, how to calculate the cost? For example, LG Videocon, they are having a different product like a refrigerator, air conditioners, water coolers. Now in that one common part is used, that is a compressor. Now suppose the compressor is manufactured by the LG company or the Videocon company and they are utilizing in their different product. So the compressor is manufactured, so it is the accessible goods, on that the duty has to be, excise duty has to be paid. But it is used by them for their different product like a refrigerator or the water cooler, etc. So that is called as a captive consumption. So it means to determine the assessable value of the accessible goods used for the captive consumption. Captive consumption, it means a product is manufactured but not for a sale, but it will be utilized in their another product for the purpose of a further manufacturing. That is called as a captive consumption. So CAS 4 is basically in relation to the calculation of a cost of production for a captive consumption. CAS 5, that is the average or equalized cost of transportation. To determine the average or equalized cost, transportation cost. Basically, whenever you are distributing the goods and transportation cost is incurred, you are not charging a different prices for a different destination, but you are charging the same price for the all the destinations normally in a big organization business. So now in that price, how much is the cost of a transportation is involved? To find out that the average or the equalized cost of transportation, how to calculate that? It has been given in our cost accounting standard 5. Cost accounting standard 6 is in relation to the material cost. Now for cost accounting standard 6, the objective is the same, that bring the uniformity, consistency in the principles and methods of determining the cost with a reasonable accuracy. That is what the main intention for formulating the cost accounting standard. So cost accounting standard 6 in relation to the material cost, cost accounting standard 7 it is in relation to the employees cost, cost accounting standard 8 is cost of utilities, different utilities which has been utilized in a manufacturing or providing a services. Cost accounting standard 9 is in relation to packing material cost. So over here the objective is same. If you will going to refer to the objective, to bring the uniformity and consistency in the principles and the methods of determining the cost of utilities with a reasonable accuracy. Cost accounting standard 10 in relation to the direct expenses. As we have seen, what is the meaning of the direct expenses? Similarly, cost accounting standard 11, office and administration overheads. Cost accounting standard 12 in relation to the repairs and maintenance cost which is incurred in an organization for the purpose of your repairs of machinery, equipments, etc. Again, the objective in relation to this is the same, to bring the uniformity and consistency in a principles and methods for determining the cost with a reasonable accuracy. Cost accounting standard 13 relate to the cost of a service cost center. In an organization, whether it is a manufacturing organization or a service organization, there will be a service cost center. It means which will going to provide the services to the other department. In every organization, there will be a canteen, there will be a staff welfare, there will be a what we can say a recreation center. Now these centers which will be there, a canteen, recreation center or a staff welfare center, all these are nothing but the service cost center, which are providing the services to the other department. You have to see that there should be a uniformity and a proper consistency should be followed for the purpose of arriving at a service cost center cost for the purpose of ascertainment with a reasonable accuracy. In a manufacturing organization like a chemical manufacturing, etc., there will be a wastage which will be there. Wastage which is coming out, that wastage has to be properly seen, it has to be properly utilized, or it has to be disposed of. For that purpose, how to utilize or how to do the pollution control cost. For that, a cost accounting standard 14 has been framed. And last but not the least, a gist is that is nothing but the final thing is regarding the selling and distribution. Every organization is having the aim of selling their product or selling their services. For that purpose, the selling and distribution overheads which is incurred, expenses which are incurred, how to account that, how to have the uniformity in that overheads, which expenses are to be considered. It should not happen that administrative expenses will come into the selling and distribution. It should not be like that. The uniformity must be there. If this cost accounting standard will be adherent, it has been followed in every organization, then there will be a comparability, there will be a uniformity, having ascertainment of a cost, a maintenance of a record, and that is why this cost accounting standard has been framed by the Cost Accounting Standard Board. So our first chapter which we are studying at present is related to the introduction of the cost and management accounting. I am quite sure that by this time you must be fully aware about what exactly the meaning, what is the importance, what is the scope, what are the methods and the technique of a cost accounting. Let us move towards the management accounting. Now my dear student, a cost accounting, financial accounting and management accounting, these are the three different branches of the accounting. Normally to say these are related to the one another. Whenever you are thinking about a business, first of all you have to do the costing. First of all you have to decide that whatever the product or service that I will going to provide, for that how much cost I will have to incur. As per that you will going to decide your selling price. Where the costing is end, over there the financial accounting will start. So on the basis of the actual transactions which are taking place, a day-to-day transaction which are taking place, on the basis of that you will going to maintain your accounting, that is a financial accounting. And after a financial accounting, a preparation of financial statements are over. How you have performed with a last year, with that of the current year, or with our organization, how our organization has performed with that of our competitors, the making the analysis of that for the management purpose is called as a management accounting. So it means there will be a first cost accounting, then you will have the financial accounting, and then at the end you will going to have the management accounting. So let us understand the management accounting, their scope, their techniques, etc. as an introduction part of it. So management accounting, when we are talking about as a compared with a financial accounting and a cost accounting, a management accounting is a latter development, as I told you just now. The management accounting links the management with accounting, because the top management people may not be always having a accounts background. They may be from a technical background, they may be from a different areas of a non-commerce background. So it is necessary that they will have to be linked with that of the accounting, and that the important thing is done by the management accounting. Management accounting collects and provides the accounting, cost accounting, economic and statistical information to the main at various managerial levels to assist them in a performance of a managerial functions and their evaluation. So what is the job of the management accounting, or what is the usefulness of the management accounting? It collects the data from the financial accounting, cost accounting, from outside data, outside sources, economic and statistical information from the outside source, and it will be provided in a systematic manner to the managerial level, top management, middle management level, so that they will be able to perform the managerial functions in a effective manner. What is the objective of management accounting? So remember, as I told you, management accounting will going to follow after the completion of the financial accounting. Once you are ready with the trading profit and loss account and the balance sheet, then the job of the management accountant start. Once you are ready with that of the ascertainment of the cost, then after that the management accounting jobs, it will going to begin. The main objectives of a management accounting are first, to formulate the planning and the policy. Why the management accounting is done? Because on the basis of the data which is analyzed, the presentation which has been made by the management accounting, on the basis of that the future planning, the policy of a company can be decided. Secondly, to interpretation of a financial documents. The main intention of a management accounting is that the data is to be presented in such a manner that suppose the person is unaware of accounting, then also he should be able to follow the calculations which are there, the presentation which is there, it should be understood by the layman. So interpretation of the financial document. What does that financial documents mean, or financial statement means? That should be converted into the lucid form to be understood by the layman. That is what the one of the main objective of a management accounting. Third, to assist in a decision making process. No doubt, on the basis of the data presented, analysis which is made, the management will be able to take the decisions to help in control. Whenever you are comparing the data of the 2 years period or 2 periods data, you will going to compare. On the basis of that, you will come to know that where your expenses are going beyond your control, where you are incurring a higher expenses, why it is incurred, how to control that. Accordingly you can think about to provide the report to the management. By presenting only the trading profit and loss account and the balance sheet, it will be understood, as I told you, only by the person who is having an accounting background. But the main intention is nothing but to be understood by a layman. Even if the person having an engineering background, even if the person is having a science background or an arts background, or even if he is not a graduate, he is know only to understand the English and the presentation. In that case, such person should also be able to understand the data presented. That is the providing a report in a proper manner. That is also the one of the objective, and to facilitate the coordination of the operation. A cost accounting, financial accounting, and the management, in between that, to have the proper coordination in the operation of an entire organization is another one of the important objective of the management accounting. Are considered as the nature of management accounting. First is the management accounting is a decision making system. Why the management accounting is used? It is used as a decision making system. Secondly, management accounting is futuristic. Management accounting always think about the future. Whatever the past that has been done, analyze that, and whatever the adverse situation or adverse things are there, how to eliminate that in the future, that management accounting is thinking about. The third, management accounting is a technique of a selective nature. It is not necessary that each and everything has to be presented, converted into the understandable manner. It is having a selective nature. Only the necessary things which are there, a financial statement, etc., only that will be converted. A management accounting analyzes different variables. It is not stick to the one thing. It analyzes the sales, it analyzes the material cost, it analyzes the stock, etc. A different part or a variables it will going to analyze. The fifth one is the management accounting does not set a particular format for information. It is not having a particular format. Of course, now the efforts has been made that there should be a uniformity even in a certain statement which is or a presentation which has been made by the management accounting, like a cash flow statement. There should be a uniformity. For that purpose, a accounting standard has been set for the purpose of making the cash flow statement. But again, a management accounting does not have a particular format for presenting the information to the management. Their aim is that a layman should understand the information which has been presented by the management accountant. Now, what is the scope of management accounting? Formation, installation and operation of accounting, cost accounting, tax accounting, information system. Management accounting has to construct and reconstruct this system to meet the changing needs of a management function. In every organization, there will be a formation, installation and operation of an accounting system, and a cost accounting system will be there. A tax accounting will be there. These are to be constructed or reconstructed in such a manner so that it will be helpful for the management functions. Cost accounting and financial accounting is done on the basis of their accounting standard. It is done for the purpose of uniformity. But management accounting, again and again I am repeating, they are having the aim is that it is to be presented in such a manner that even a non-commerce background should be able to understand the accounting which is there. Therefore, the second scope is the compilation and the preservation of the vital data for the management planning, which is the main data that has to be properly compiled, that has to be preserved for the future purpose. That is why we have seen a management accounting is a futuristic. Third one, providing the means for communicating a management plans to the various levels of organization. It is necessary that a plan has to be implemented. If any decision has been taken, that has to be implemented to the different levels of organization. Even why we are doing it, that should be known by the labor at a lower level, that why I am doing this, with the help of that what will be the benefit for the organization, and ultimately from that how I will be benefited. That is what the means of communicating the management plans is done by the management accounting. Providing and installing an effective system of the feedback reports. Right from a downwards, that is at the production line till the top management, a proper reporting system should be there. Then only a report should be at a proper time, it should be in a proper manner, and it should be given to the proper person. Accordingly, the effective control can be maintained in an entire organization. That is what the job of the management accounting. Analysis and interpreting the accounting and the other data to make it understandable and usable to the management. Already we have seen it is one of the important function. Whatever the costing and financial data is there, that has to be analyzed in such a manner, presented in such a manner, so that it can be understandable by the management level. Next is the assisting management in the decision making by providing relevant accounting, other data, and analyzing the effect of alternative proposals on the profits and the position of an enterprise. So management accounting, by the name itself, it suggests it is assisting the management. Whatever the management requirement is there, according the data will be presented. That is why there is no fixed format, as we have seen. There will not be any fixed format. As per the requirement of the management, in that manner, the data will be presented. So it is making the assistance to the management in providing the data, accounting, as well as a different type of the proposals in respect of the profits, a position of the enterprise. For that purpose, it is helping the management. Providing the methods and the technique for evaluating the performance of the management in the light of the objects of the enterprise. One of the scope of the management accounting is that it provides the different methods and the techniques for evaluating the performance of the different level of the people. For example, the company's policy is that goods will be sold to the customer on a 30 days credit basis. Now the management is interested that whether our collection department is performing properly or not. So for that purpose, the management accountant will going to find out the debtors collection period in a number of days or the number of months. If the number of days debtors collection period which is calculated comes within the 30 days range, it means the collection department is functioning properly. Their performance is good. But suppose company's norm is to collect the debtors collection period should be within the 30 days period, and collection is made from the debtors in a 45, 50 or a 60 days period, it means the performance of the collection department is very bad. So such type of evaluation of the performance can be done with the help of the management accounting. Not only that, after that improving, modifying, sharpening, the improving, modifying, the sharpening, the effectiveness of a coexisting techniques of analysis. That is also one of the important scope of the management accounting. Not only by presenting the data, but the management accounting also suggests the improving, how the modification has to be done so that techniques or the analysis which has been done can be utilized effectively. So that is what the scope of management accounting. Now for this management accounting to be used effectively, what are the tools and techniques of management accounting are there? One is the financial planning. How the money has to be utilized, how the finance has to be utilized effectively. That planning has to be done, and it is done by the management accounting. Financial statement analysis. a presentation of a data of a trading profit and loss account or a balance sheet in a most suitable manner to be understood by the layman. For that purpose, it is one of the tool or a technique of a management accounting of financial statement analysis. Next is the decision making, control techniques, statistical and graphical techniques. Many a time in a presentation, if you will merely give the figures, people may not be able to understand. But if you are going to present that data in a graphical manner, that is in a stat bar manner or in a line manner, etc., in that case you will be able to understand it in a better manner. Such technique is also even used in a sports field. If you are going to see, whenever we are watching a 2020 cricket match or a limited over 50 overs match, after the completion of one inning, when the second inning is started, you will find that they are showing the graphical manner how the second inning is progressing as compared to the first inning. With the help of that, we come to know that how the second team is able to cope up the scoring rate. By merely giving the figures, it will be very difficult for a layman to understand. So it is one of the tool or a technique of a management accounting that the accounting information will be presented in a statistical and a graphical techniques or in a graphical manner. And next one is nothing but the reporting. All this thing is done for the purpose of what? It is for the purpose of reporting to the management as well as the needy people. So that is what the tools and the techniques of management accounting. Now it is also important to see the difference in between these three types of accounting. So first, a difference in between the financial accounting and the cost accounting. Objective of financial accounting is that to provide the information about the financial performance and a financial position of a business. How much is the profit? What is the financial position through the balance sheet? To provide that information is the main objective. Cost accounting main objective is to provide the information of a ascertainment of a cost, to control the cost and for a decision making about the cost. So therefore, as I told you, in any organization, there will be a first cost accounting, then it will be followed by the financial accounting. So it provides the information about the ascertainment of a cost of a product or services, how to control that and how to utilize for the decision making. The nature, financial accounting classifies the record, presents and interprets transaction in the terms of money, whereas the cost accounting classifies the records and present and interprets in a significant manner as a material, labor and the overhead cost or the other expenses. Next is of recording of data. Financial accounting records the historical data. Financial accountant will always say that first of all, let the transaction should happen. If the transaction will happen, then only I will record in the books of account. Unless and until the transaction has not taken place, I will not record. So it records the historical data. Whereas the cost accounting records and present estimated a budget data for the future period. It makes the use of both the historical cost and it will be connected with the predetermined cost. Financial accounting information is used by whom? It is used by the external people. Users are shareholders, creditors, financial analysts, government and its agencies. Whereas a costing data is basically used for the internal purpose, a management purpose. It is not disclosed to the outside people. Analysis of a cost and a profits. Financial accounting analyze, it shows the cost and profit of the organization. But cost accounting is not interested in the cost and profit of an organization, but it is interested in finding out the cost and profit of a product which is manufactured or a services which has been rendered by the organization. So it provides the details of cost and profit of each product, process and the job which has been carried out. Time period. Normally if you are going to see, the financial accounting is done at the end of a one period, that is normally consistent to be a year. So they are prepared for the definite period, usually a year. But cost accounting, it is as per the requirement of a person, requirement of a businessman. It can be prepared as and when it is required. So it can be prepared weekly, it can be prepared fortnightly, or it can be prepared monthly, half yearly, quarterly as per the requirement. Presentation of information. Financial accounting, it is having a set of format to be used for presenting the financial information. Manufacturing, trading, profit and loss account and the balance sheet. A fixed format is there. In a cost accounting, no doubt there are certain fixed format, but even then, the set of information, there is no any fixed set of information for presenting the costing information. Cost accounting is nearly a combination of a certain part of the management accounting. If information is needed in a different manner, yes, cost accountant can present the information as per the requirement of a person. So therefore, even though there will be a certain formats are there, there are no set format for the presenting the cost informations. Let us see the difference in between the financial accounting and the management accounting. A primary users of a financial accounting are the external users, investors, governments, authorities, creditors. Management accounting information is basically for the internal purpose, managers of a business, employees, etc. Purpose of information. Financial accounting purpose of information is to help the investors, creditors and other to make the investment, credit and other decision. On the basis of the financial accounting information, the creditors will going to decide whether it is worthwhile to give the credit to this organization or not. The people will come to know that how much is the profit of the organization, whether it is wise to invest the money into this organization or not. The purpose of information in case of the management accounting is to help the managers plan and control the business operations. Timelines, financial accounting is always a delayed and a historical. After the transaction is over, then only the financial accounting is recording the transaction. But management accounting is making a link with that of the current and the future period. The information which is utilized, that nature of information in the financial accounting is objective, auditable, reliable, consistent and precise. Because it is on the historical basis. Whatever the cost that is or whatever the transaction that has already taken place, on the basis of that it is recorded, and then hence the nature of information is auditable, reliable, consistent and precise. Management accounting, it is related to the future, so it is more subjective, judgmental, valid, relevant, and it is considered to be accurate in respect of a future period. Scope of financial accounting is highly aggregated information about the overall organization. It does not relate it to the particular part or a center or a department of organization. It is related to the entire organization. But management accounting, again, disaggregated information to support local decisions. As per the requirement of a management, the information can be provided to the management by preparing a necessary analysis, a statement as well as presentation. Behavioral applications or implications, that is nothing but concerns about the adequacy of a disclosure. Financial accounting is having a certain set of format, how to disclose the information. Whereas a management accounting concern about how the reports will be affect the employees' behavior, how it will be effectively utilized by the management for the purpose of employees, that will be the behavior implication. Features of a financial accounting are must be accurate, timely, compulsory under the company's law, is an end in itself. It is as per the statute. You have to present the data or you have to present your statements on a particular date itself, as per the statute, as per the law. That is why it will be must be accurate. It has to be submitted in time and it is to be submitted compulsory. Whereas management accounting usually are approximate but the relevant and flexible. Except for a few companies, it is not mandatory, is made to the end. It means management accounting in that the data when it is to be presented, how it is to be presented, it is not a timely. Of course, there are certain data or a statement that has to be presented in a time, like a cash flow statement. As per the Companies Act, it is necessary that every registered company, by publishing their report, annual report, along with that they should publish their cash flow statement. So that has to be presented timely. But the internal records which will be there, which is to be presented to the management, it is as and when it is required by the management, that time it is to be presented. Segments of an organization. Financial accounting, it is primarily concerned with that of a reporting for the company as a whole. It is related to the entire organization. Whereas a management accounting is a segmentational reporting in the primary emphasizes. to the lower level of management, middle level of management, top level of management. As per the requirement, a segmental reporting is done, not as an entire organization as a whole. So if you are going to see, there is a difference in between the financial accounting and a management accounting, but there is a linkage in between the cost and the management accounting. A cost and management accounting, when it will going to come together, it will become an advanced management accounting. A techniques of a cost accounting, when it has been followed by the management accountant for the purpose of the decision making, etc., naturally it is considered to be an advanced management accounting level. So that is what all about we have seen in our first chapter. I hope that after going through all these things, now it will be clear in mind what exactly we have to study in this subject as a cost and management accounting.